Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about by far the easiest swing trading strategy that I've learned. It's fantastic. We're going to show you guys the tips and tricks and everything you guys must know about this setup and approach. So I hope you guys enjoy it. Like, follow. If you want to learn more about swing trading, check out our school. We are revamping everything. We are revamping the swing trading course, meaning we're going through and anything that's outdated, we're refilming anything that we want to, that people had questions about, we're answering. So guys, check it out. You guys can get 50% off right now by using code presale. Code presale, 50% off. And the old course is in there, so check it out, and the new course is rolling out. So check it out. But guys, let's dive into this here. So this is by far the most common question I get asked is, Carter, what's the best swing trading strategy? So I figured let's just make a video really explaining the best one here. So ticker symbol BUD was a more recent swing trade here that we took. Now, you guys will see the stock has gone from $58 all the way up to $86. So it establishes something called an upward trend. Upward trends are incredibly important, probably one of the most important things to look at as a swing trader. And the reason why is because a lot of people think that a stock that is selling off is magically going to recover, but then they also think a stock that's up is magically going to start selling off. So there's some tips you need to look for. The main goal of swing trading, in my opinion, is finding that stock on an upward trend that has sold off to some level of support. Support could be a trend line, right? So a trend line, so essentially a straight line that has tendencies of getting support here. And we can look at this, and let's just continue to draw this out and see if there's any good trends on that white line. So not too bad. You guys can see it hit it once, twice, almost 3 times, 4 times, establishing good buying pressure. But more importantly, I really love EMA lines. These are moving average lines. So the main ones I use are the 50, the 90, and the 200-day moving average lines. The 50 is the yellow, the 90 is the blue, 200 is the red. The main difference between all of them, the higher up you go, the harder the support level is going to be. So the 50 isn't going to be as strong as the 90, and the 90 isn't going to be as strong as the 200. So you can see here that when the stock sold off down right to these moving average points, we've gotten buying pressure, but it broke through them because these ones are weaker than the 200. Sold off, hit it here, buying pressure, buying pressure, buying pressure, buying pressure. So I knew as the stock sold off, went from 85 all the way down to $78, I knew, okay, we've seen recent tendencies of this stock here getting buying pressure, right? Hit it there. Let's go ahead and see here. So 1, right, 2, almost in here, right? If we zoom back, 3. So I knew we could get some sort of move, right, going up. So that's the second thing. Stock on a support level. The third thing is looking at the RSI. So the RSI here is a momentum indicator. You guys can see here as the stock sold off, this put the RSI near and around a 42. Last time it was trading for a 42. Would you look at that? When it got a good move going up on that same support level. So I go, okay, let's go ahead and look at some sort of lower time frame, because as a trader, or a swing trader, you never just look at one individual time frame. You want to look at a variety. I start with the daily and I move to the hourly. Moving to the hourly does a great job of finding the breakouts and the entry points. That's key here. So we can see, right, if we look at this, we can see that this stock essentially was selling off just like this. So I go, okay, if the stock pushes above that white trend line or that 200-day moving average line, right, that red line here, this could be a breakout. And that's exactly what happened. It popped up, got in near and around the $80 mark, keeping stops below 78. Now, why did I keep stops below that? Well, that is the lowest, pretty much the lowest low, right? So near and around 78 for a possible push right up to some highs, almost a 3-to-1 risk and reward. So now what we did here is we found the new trend. The new trend at the time here was something like this, right? So the stock essentially, let's go ahead and look at this here. So the stock was really at first using this trend line, right? It was using this trend. So when it dipped down below that trend, we did sell some of our shares, locked in guaranteed profit, but it did not break down our original stop. So we held some other shares. We did sell, honestly, probably about 80% right here, but we made over $1,000. So now, as the trend is changing, so is our trend line. So the trend line went a little bit like this, then the stock rallied its way up, right? Hit it, boom, rallied its way up. That's why having and understanding your stop loss is very, very important. So we are actually holding some shares, about 20% of our original shares. We're up about $1,400 right now. And our stop loss right now is near around $85. So if it dips down below that, we're just going to sell our shares, lock in guaranteed profit. It's a textbook trade, guys. So I hope you guys enjoyed it. And if you have any questions, let me know in the comments. If you want to learn more about trading, sign up with our school. And the broker we use is Moomoo. So feel free, check them out, like, follow, and I hope you guys have a great rest of your day. Take care.